right, so last year, that seasonality thing, remember the seasonality map? It was golden. I mean, if you followed that, just filter out everything else, just didn't listen to any of the noise, just watch seasonality, you would have made a fortune. This year, seasonality says that you must be invested. And here's the thing, apolitical voters probably are torn over who to vote for. It won't matter with the stock market too much, although I will say recent history suggests that a Republican elected, the market will go up twice as much. Still, it means that you want to be in this market. However, that might get confusing because there's another set of data that suggests that if the incumbent wins, the market's up, but it's up even more. So I want to bring in now Great Hill Capital Chairman Thomas Hayes. And Thomas, you like this presidential pattern, right? To really, it's going to work again, you think?
I think so. I think the average return since 1928 for an election year is 11.28. Sitting president, 13%. I think this is the pause that refreshes. Everyone's looking for the big correction. Everyone taking tax law selling. I think it's going to surprise everyone again. New highs before we get a normal correction and a more subdued year, high single digits, low double digits.
I mean, it is interesting, though, because in the beginning of the year, there is a little bit of turbulence, particularly when the incumbent party is going to lose, right? So, and that part, maybe it's telling us, there could be a new person in the White House. But this also is because, a lot of money comes into the economy, right? I mean, you're trying to, it's not a chicken in every pot, right? It's like something a little bit closer to Oprah, a Tesla in every driveway. I mean, the incumbent party is going to pour a ton of money into this economy.
Yeah, and look, we've gone straight up for 9 weeks. We had to take a little bit of money off the table the first week. But no matter how this winds up, you're going to wind up for the year. High single digits, low double digits. What's the difference? The key is the money's going to be made under the surface.
The bottom line is you want to be long this market no matter what political party in. It might help to be apolitical if you want to make money.
That's right. At the end of the day, you want gridlock. You just want one party to win one of the branches so that they can't get much done in Washington. That's a good thing for business.
All right, let's talk about sentiment for a moment. Everyone bellyaches about the individual investor being too bullish. I thought that November pivot from the individual investors was smart. It was brilliant.
Yeah.
They got in. They got bullish before Wall Street did. This is the most recent, one of the most recent from the Bank of America sentiment among money managers. So it's sort of right in the middle, but it's not, it's not roaring sentiment. Does this mean they have to play catch up then?
Yeah, institutions are still relatively pessimistic. You look at they're just as low as they were coming off the great financial crisis.
Right.
And the COVID thing before we even knew that there was going to be a vaccine. So institutions have to catch up. And to your point, the retail investor is the one who got it right during COVID. They were buying well ahead of the institutions off the COVID low, and they made a ton of money into 2021. I think we're seeing a similar situation right now.
All right, we're talking about historical patterns. Again, percent of the time that the S&P outperforms the market. Now, this is associated with rate cuts.
Yep.
This half of the chart, folks, is before the rate cut. This half is after the rate charts. Everything does relatively well, but you like a couple on here. You like energy, for instance. I know that.
Yep.
Energy's getting hammered today. What's going on there?
Yeah, so this is a seasonally weak period for energy into February. I think coming right out of the cuts, we like energy and we like consumer discretionary. You can see here straight away, this is where you get maximum outperformance. You've also seen everyone was bullish about energy last year after you had the huge run in 2021. Now people are pessimistic again.
So one month after the cuts, consumer discretionary is usually up 89%, blowing away the rest of the field.
That's right.
Wow.
That's
amazing.
right. Let's
talk real quick then about some of your picks. You had some grand slams.
Yeah.
Going back to last March, you had some grand slams. Bank of America, 19%. Google, 35%. Amazon, 45%. What do you like right now? We only have 30 seconds, but give us 2 more. Now the pressure's on,
all right.
man.
Turn around,
the pressure's on. Was it a fluke? Was it a fluke?
Turn around, Tom. It's back. We've got a crazy one for you. Canada Goose, okay?
Yeah, I've been married in that bad boy for about 9 years.
Okay, so this thing is down 85%. It's down on inventory concerns. Their margins are expanding, up from 52% up to 68%.
Oh, I just thought because Drake wasn't hot anymore. What else you like?
This thing, they've got a plan to grow revenues from 1.2 billion.
But you also like
billion.
Comstock, too.
I like Comstock. Jerry Jones owns 65% of the stock. He owns it at $7. You can invest pari passu with him. Everyone's pessimistic.
So what's going to do better over the next 3 months, Comstock or the Cowboys?
I'll tell you, Comstock over the next 6 months, the Comstock will do better than the Cowboys. And Jerry Jones said that his holdings in Comstock were worth more than the Cowboys in intrinsic value. So we like that as a double or triple over the next 12 to 24 months.
All right, you got an amazing track record. Happy New Year, my friend. Appreciate it. All right, folks, coming up, a company that is thinking